And here we go. Ask Slim Live. Welcome to everybody who came in the room March 30th, 2021. Information and support for traders and investors in a time of crisis and beyond. Lots to look at in here. We got great stuff to show you today, and I think you're really going to enjoy it. This slide just gives you some legal stuff where it says that the information that we share with you, no matter where we share it, is for education and entertainment. Everything we do on the website, whether it's oral or written, is for that purpose. And you should always check with your investment advisor to make your decisions. Live events are being held to support for members and not included in the memberships. They've been created for a time of special needs. Note these events are likely to be recorded. This one is being recorded right now, and at times will be offered for public viewing. I want you to note that we do share this now with the people that are members, and once in a while we do put it out on YouTube. So everything that we do at askSlim is to protect your identity. We never share your information. We don't share it with third parties or let third parties market to you. None of that. So just wanted you to know that your participation in this event says that you agree and understand that we will be putting this video out for public viewing. And your identity may be seen. You may be seen during this video. All right, so let's see what we're doing here. Well, I'm Steve Miller, known as Slim. For those of you that don't know why, it was 1974, May 20th, that I came on the floor and began trading at the CBOE. And yes, 1974. Stop shaking your head. And what happened then was in like the first hour or two, I made a trade with another guy, and my badge was SLM. And he looked and he said, Slim. And that was it. So that I've been Slim ever since then. My grandkids call me Slim. My wife calls me Slim. Everybody calls me Slim. So, and so kind of Steve Slim, it's all interchangeable. So call me whatever you want. I've been a past investment manager in a hedge fund, a coach, a host at askSlim on Tasty Trade, founder at askSlim.com. And I've coached countless traders out there, built workshops, done a ton of personal growth coaching also, because I'm certified as a personal growth coach, also in emotional intelligence. So I'm one of the few people out there that actually combines trading and the psychological aspects of trading with the experience that I have. So you see a lot of that when you watch my trader psychology videos. If some of you are level one, then you would not have access to that. So I encourage you to step it up and get level 2 so that you can watch some of those videos. Matt, he's been with me all the way back since, well, that would be about 2005 or so. Matt is a direct protege of mine, took my coaching program way back then, joined me in the hedge fund, became a managed futures broker. He is now COO, Director of Product Innovation at askSlim.com, and a partner. Arvi, 10 years in the industry. He is truly an expert in psychoanalysis. You see his amazing work. Few people in the world can put together the videos and analysis that he does. Well, maybe it's only he and I. And he's been in this business for a long period of time. He started following me on Tasty Trade, and then contacted me and said, you ever get to do this on your own? I want to be part of it. And I called him instantly when that was the case, and he joined me. He ran the Boston College Endowment Fund, and he is just a great teammate here. Vice President of Business Strategy, a lead psychoanalyst at askSlim Incorporated, and a partner in the company. So you're with 3 partners right now, and we're running, I think, a company that is going to bring you things that you have never seen before in the industry. And I'm hoping that you are already seeing that we bring you fantastic content all of the time. Just a little show of hands so that you can test out that raise hand thing. Who's here for the first time on a live event? Raise your hand if you're the first time here on a live event. Okay, so we have a few people, not a lot of people. So most people have been here before. That's great. And some more hands going up. So I think you'll enjoy what we have to bring you, and especially today when we look at the content, because as you can see here, I'm going to do a little, maybe 10 minutes on the indexes. And then Matt's going to bring you a member resource and usability rundown, essentially, where he's going to give you a review of the support information we have for our content and where to find it on the site. And I think you're going to be amazed at all of the things that are available in level 1 that probably our more advanced levels didn't even know was there. So I think you're going to really enjoy it. Then we'll open it up for questions in our express round for a Q&A. Any questions on our services, on trade planning, chart analysis, trading issues, we can help you with all of that. So hopefully you will find that this is just an amazing, probably about 1 hour, maybe between 60 and 70 minutes that we're going to bring you. Please put your questions in the Q&A, not in the chat, and then we can track them a little bit better. So let's get right into the information here as we switch over and look at the charts. So I'm going to put, this is an S&P chart, and I know you're all familiar with our weekly and daily side-by-side analysis. For those of you that are brand new, maybe to level 1 or 2, this is cycle analysis where we look at the rhythms in the market. It's essentially money flow. I mean, if you put up a money flow chart, you're going to see similar type things, except this is visual, it's observational. When JM Hurst wrote the book, Profit Magic of Stock Transaction Timing, he made really that point, that this is an observational way to do analysis. And that means that you're observing the markets as they change. And that's what cycle analysis does, is that it's a flexible type of analysis where we try to use at best the information the market gives us and changing information to have a very flexible type of analysis. You will not find us being rigid at all. You will find us looking for a specific occurrence based on the data we have. And then if it changes, we're going to change right with it, because we're going to try to explain and forecast off of all the new data we have. Let's talk about this week really quickly. This is a very odd, maybe last 5 days, and I'll tell you why. I've gotten lots of emails to me, people asking, and on social media, they're kind of perplexed at the market right now and asking me what's going on. Early last week, Monday, Tuesday, Wednesday, we had days where the market sold off sharply at the end of the day. That was not anything that we had seen in a long time in the stock market, which said that there were some sellers out there. And at the same time, on Friday came a huge markup where the S&Ps rallied 50 points in the last hour. And that kind of killed that whole idea that there were sellers coming in at the close, as we had all of those buyers. It was a short squeeze, and people just piled on. But then you would think that the market would give ground early in the week, which it did, but then rallied back very much immediately after that on Monday, as some bad news came out over the weekend that would normally cause the market to have a lot of angst. Archegos came out, and they had margin calls, forced selling, and that's unusual to have at a top of the market. Usually it happens as markets begin to fall. But there's been erosion underneath, as we've seen some selling in the very speculative areas of the stock market. We've seen the Russell get hit pretty hard, and we've seen the stay-at-home, work-at-home stocks get murdered, some of them. And even seeing the financials weaken in here, and that brought this forced selling. Now, you would have think that would have caused the bond market to rally in a flight to safety, but you didn't. As a matter of fact, the 10 years made a recovery peak at 1.76 today, which is really odd, because you would think that yields would fall very sharply based on the domino effect that we're seeing from Archegos and a lot of firms that are saying that they have a risk involved in here. But you know, when you have a firm that's got $2 billion in risk or $3 billion in risk, in a world where the government has made $1 trillion like a wooden nickel, maybe it doesn't scare the market anywhere near as much as that used to. But we would normally see the market doing very poorly with that kind of background news, and we're not seeing it now, which just speaks to the strength that we have in the market, and that the upward momentum that we've been talking about still exists. We'll talk about that when we look at a few of these charts. So the spec stocks, they're getting slammed. The tech stocks, well, they're weak, and then it's leading the Nasdaq down. The bank stocks, financials, they're pretty weak, but the market is really strong. And that's kind of an anomalous or odd situation that we have right now. And the only thing you could really explain is that investors are believing that the government's money creation is going to keep holding the market up. And then there is the technical aspect of it, which is what I'm going to start to show you now as we look at the S&P 500. So I'm going to look at the weekly chart right here. And what is the most significant thing that I see here is, first of all, there was a corrective period right in here that only brought the S&P 500 down 5.8%. It brought the Nasdaq down 12%, the Nasdaq 11.2, the Russell 12%. So there was some real decline in here underneath the market that you see here looking at the S&P 500. Momentum in here never came down. Momentum is still strong when you look at this. And we are now 4 weeks off of the low, which is very early for any kind of a market peak. You would expect to get a little pullback in here and then be moving up again. You see this early rally, a little bit of a pullback and then up again right there in that cycle. This big pullback here, but that's the election that happened right there. And then you didn't really get a downtick in momentum there either, and it went straight up. So the conditions that we look at in here are quite strong in the S&P 500, and 4 weeks into the rally is early to peak. And at the same time, when I look over at the daily chart right here, you will note, for those of you that get our charts, that I have shortened up these cycles by the minimal amount. So these are 28 bars right here. These are 14 bars right over here. The half cycle made a low right there, as you can see, and then it ran a little long. This one ran short, but then we kind of line it up again, and then you get this low on the minor cycle pretty much spot on right there. This is what I mean by getting new data and then shifting it around a little bit so that we can use it for our best advantage. Here you can see momentum still strong in here, and here's that big Friday close and just these two little down days. If you get one more little down day, this will be called the rising three methods. Those of you that don't know what a rising three methods is, it looks like a big upside bar, three little downside bars that live inside of the upside bar. And then what normally happens is you get a continuation in the upside. So when I see this going on, a big upside move, positive momentum, little down days like this, it says to me the odds are pretty good sometime in the next couple of days, you're going to begin to get another push to the upside. So everything I'm looking at in here is still positive, looking at the S&P 500. Positive momentum, positive formations, and the likelihood that we get one more pop up in here and then get into this corrective process that you could see that would be right starting from here and probably now getting down to about April 15th. That would likely get you some little decline into the support area here, which equates to the pullback I showed you on the weekly, and then you could see what the next cycle says. It's likely to be moving up again. Remember that we thought it would get over 4,000 based on this formation after that correction. So that is a look at the S&P 500. Now I'm going to show you a very different picture when I look at the Nasdaq. So while the S&P 500 made a new high, the Nasdaq, which had a much bigger correction, now is really struggling. Now you can note a few things in here. I showed you the S&P 500 positive momentum. Here, the momentum turned down during this corrective period. And when we get a rally in here, you're still in negative momentum. So that really illustrates the very distinctly negative conditions in the NASDAQ versus the S&P 500. Now you see the triangular shape in here. The odds in this triangle are that it's making this triangle after this big decline. So the odds would be that it would break to the downside here. If it broke to the upside, well, that would be about a 1 in 3 probability that it did that. And that still, of course, could happen. And when you look at only the second week of this cycle as the peak, then cyclically, it says to me, if it does come down in here, it's likely to come up and test those highs one more time and not break them. So I think we're going to get into a period where the NASDAQ, maybe in the next couple of weeks, begins for a short term to overperform the S&P 500 because this second week peak is just too early. If that peak ends up to be the peak and we break under 12,208, well, it's sayonara. That means goodbye. And that is would be a likely very, very negative condition that we would see if that happened, and be a warning as far as the stock market goes overall. And now when I look at it here, you can see a much different picture than on the S&P 500, where you had this big break right over here. Again, I've shortened the cycles to 28 days and 14. You have this low and this rally, but this target zone is much lower than you will ever see it, because this is a negative cycle. So it hits the target zone, which is surrounded by the sell zone right there, and it pulls back. I mean, it can't rally. It hits supports, gets crunched in here, and you can see in here momentum turning negative, and note the slim ribbon PO turning negative right there, while the S&P 500 is still positive. So you can see the disparity that we see, or divergence, whatever you want to call it, in the broad market, and what were the leaders in the Nasdaq. Now, there is a ton of money in these Nasdaq stocks. And if we get into a period of liquidation or deleveraging, these stocks are going to really hurt the market, because right now the market's surviving weakness in the Nasdaq, but it's not likely to be able to continue doing that if this Nasdaq does break down. If we get what we call a basing cycle in here, so that would be, I have this side by side so that you can see. I think I want to bring this in a little tighter in here. That if this cycle that you see right over here bases, in other words, keeps chopping around in here, finishes above this low, which is likely that 12,208, then the next cycle over here will likely take that out and get into the higher resistance zone. Then this triangle will break out on the upside, or will move back up to the upside. And you can see this intermediate right there, that intermediate fib is right around the 13.5 area. This is around 13.550. So you can see that would be, that upper sell zone would be where the next cycle would take you to up there. And all of that speaks to the market holding up until that May-June period that we're looking for right there. So that's a look at the S&P 500 and the Nasdaq. I wanted to really spend some time in breaking down the differences that are going on right now. And I'll probably be redundant and do this again in future speak tomorrow when I look at this. But I tend to give a little more detail on these live events than I do when I look at it in future speak, because that's already an hour and 10-minute show. It gets really long and 24 different futures to do. So I tend to give a little more detail when I do that right here. That's all I'm going to show you on the indexes right now. Remember, if you have any questions around any of the stocks or ETFs or futures, you can put that in the Q&A for the end of the show. And I am now going to turn this over to Matt, who's going to bring you some just great information about where and how to find our support information on the site. Matt, take it.
Thanks, Slim. Good afternoon, everybody. Great analysis and instruction as usual, Slim. Appreciate it. All right, everybody. So I'm going to share my screen here in just a second. What we're going to do is it's going to be very brief, probably 5-10 minutes at the most, so we can get over to our Q&A. But I wanted to make sure that I present to you some of the great resources that we have for our members, and announce that over the next several weeks, we're going to continue to expand these resources and also streamline where you can find these resources and usability tools for our members. Because as you've heard us talk about, it's our objective to assist with supporting your trade planning in terms of providing you with world-class technical analysis tools and resources so that you can be as efficient and effective with your trade planning as possible. So today, I'm going to show you in each of the member dashboards some of the areas related to those levels where you can find resources and support material. And then as we release and streamline these pieces over the next several weeks, we will send out emails, and we'll also highlight this in our askSlim live events. So right now, you should be seeing a level 1 dashboard. If that's the case, please raise your hand. Okay, good. All right. So level 1 dashboard is, as Slim mentioned, essentially if you're a level 2, 3, or 4, you get to access the same content in those lower levels. And with level 1, probably 4 or 5 weeks ago or so, we did a full askSlim live event that was all about level 1, a walkthrough, because at that time we had added some new services into level 1. And just recently we finished establishing a let's call it our minutes. For those of you that use our minutes reports for Market Week and Future Speak, we did a minutes report walkthrough of that video webinar, and truly just some great information. So you can see here, and we'll be sharing this probably tomorrow. We'll make sure that all level 1 members get it, and actually all of our members have access to it. But what we did is we walked through all of the services in level 1. So we'll make sure you're going to get that. And as Slim mentioned, it's pretty amazing that but level 1 has an incredible amount of services in there, trade planning tools, some great sample videos. And we walk through the details of each one of those services. And even if you are 2, 3, or 4, you may find some things in here that are new to you. So make sure you check that out. And we'll be sending that out over the next few days. So that'll be key for our level 1 members. Our level 2 members, we get a lot of questions on the SIR intraday grid. So for those of you that are new to level 2, you're going to want to go into your dashboard area, and you're going to want to click on the SIR chart stream broadcast section. And in that section, you're going to see, number 1 is the chart stream Zoom link. So if you ever don't receive your email, because we get probably 1 or 2 of these every day saying that they didn't get the SIR intraday email link, you can come here and this will be posted. Our goal is at 10 minutes before the market open is to have that in here at a minimum. So you can come in here and you can click on that. So even if you don't get the email, you always can come here to get that link for the SIR intraday chart stream. In terms of the usability guide, it's in here as well. So you can click on that link. That'll take you into the usability area for the SIR. Inside of here, there's some video overviews. And then there also are, there is a PDF that walks through the general information, the usability of the intraday chart grid. So that's a very important resource area. Also in the resources area itself, you can go into, there's Slim ribbon and there's training. So if you click on training and you click on Slim's chart training, Slim put together a fantastic video overview. It's about 20 minutes long of how to best utilize our charts at a high level. So if you haven't checked that out, make sure to do that as well. Okay, so now I'm going to move over to level 3. And level 3, the main questions typically come in around 3 areas. So chart streams. So inside of chart streams, you want to go into the chart streams usability resources center. And the team put together, Slim, Arvi, and myself, we spent a number of hours, days even probably combined with everything that we did here to pull together the key information, best practices for our chart streams. And it consists of an indicator glossary. So all of the indicators that are proprietary or that we've made modifications of, third-party indicators that are utilized in the chart streams. We have an indicator guide that we've gone through in great detail, all of those indicators. It is a PDF, so it could be downloaded. This also includes the playbook information. So we have trade setup guidelines based on the outlook period of your trading style. So we have 2 outlook periods right now, 1 to 5 sessions for near term. And we also have an outlook period of 1 to 3 weeks. So make sure that you check this out. There is just fantastic information that reviews the best practices for our chart streams. And that is for level 3 and level 4 members. And then for the level, well, I'm going to go back to this because for the level 3 members also, you want to check out Trade Ideas overview in the resources area. Arvi put together a great video overview of askSlim trade ideas. So if you're new to level 3, or if you just want a refresher on trade ideas, the sort of the logic behind how we come up with our trade ideas and how to best take advantage of those, that is in the trade ideas resource area here. And it's about a, I don't know, 5, 6, 7, 8 minute video or something. So it's well worth it. Check that out. And then also in the dashboard for level 3, Slimulator ranking system. So this is our ranking system. That's really a fantastic trade planning tool. Focuses on our top 83 symbols that we evaluate on a daily basis, utilizing our proprietary methodology, cycle analysis combined with momentum. And we bring all of that data through an algorithm that we built with an outlook of 3 to 6 weeks, where you can sort by directional bias and instantaneously get a look at those symbols that would set up based on the type of directional bias that you're interested in. Or if you just want to check out some symbols for some ideas, you can also go here, and that's in our ranking system. In terms of resources, right above here, you can see that there's a video of ranking system. I think we have another video that RV just put out recently that does a practical application of the ranking system, where he takes a symbol and walks through how he came to that logic by utilizing aspects of the ranking system. And then there are some other videos that talk about the indicators that are in the ranking system, our OBI, and so on. So this is a great resource area for the ranking system. And now I'm going to move over to level 4. So for our level 4 members, you're going to want to go into your workbench. And the key area to go to is going to be proprietary indicators. So for those of you that are new, or if you haven't heard us talk about this before, you're going to want to click on proprietary indicators. Now, I'm not going to show the actual page there because there is a ton of proprietary information, but I am going to just put up a screenshot. So this goes into great detail with we provide the actual toss links to our proprietary indicators are in here. Because we get a lot of questions on, well, how do we just get access to the specific links for those indicators? They're all in here. And then we did video clip overviews of each one of these aspects of the proprietary studies and indicators. And it's just a great way to get the raw information, hearing it from us on how we utilize this. Okay, I think I covered everything I wanted to again at this time. And most importantly, wanted to give you a feel for where the current resources are, and also to let you know that we're going to continue to expand these and streamline this, because as I said before, supporting you with our world-class technical analysis, tools, and these resources so that you can be as efficient and effective with your trade planning as possible. All right, that's what I've got, Slim.
Beautiful. Well done. Okay,
Excellent.
I'm going to take
Great.
this back from you, and we will look at a lot of great things in here as we have a lot of questions.
Great.
I noticed that we have a couple of questions there on silver. There's, I think, a question, maybe you'll want to take it back from me, actually. There's a level 2 member, Lewis, who says that he's a new guy, and he thought that he would see analysis on individual stocks when he signed up, but he's now only seeing the sectors and indexes, and what level for individual stocks and what service would be for swing trading options who have a 5 to 45 day trading holding period instead of a day trader.
Sure.
So you want to speak to that one?
Yeah, no problem. So I would, I'd recommend that if you're looking for something beyond indexes and major markets, that Lewis, you would look at our level 3, because our level 3 membership does go into detail on a number of individual stocks and ETFs. So level 3 would be the way to go. And then what you're going to want to do, Lewis, also is we look at the intraday. So we've designed our work, our analysis very specifically as you think about trade planning. Number 1 is what's your time frame. So we have intraday analysis that we do and services for intraday traders. Then we have analysis that we do and indicators and grids that we've established for near-term traders. So that would be, a short-term swing trader, near-term swing trader, which we define as the next 1 to 5, say, trading sessions. And then, Lewis, we have analysis and tools for the next 1 to 3 weeks, next 3 to 8 weeks, and then we even have it for the more position trader investor. So, but generally speaking, if you're looking for something more than major markets and indexes, and you want to go deeper with us, then you want to go to level 3. So if you want to write to me, I can help you out with an upgrade special offer as well.
All right, great. We have a question there on the VIX, and we have 2 questions on VIX. One of them is VXX versus the VIX. What's the difference between them? And so, one person wants to see the analysis in the VIX, so we'll jump into that really quickly. Dave Canty asks about the VXX versus the VIX. VXX is a futures ETN, so it's reflective of the near-term futures. The VIX is the CBOE volatility index, which looks at 30-day volatility for the CBOE index. So they're different in that way, but they're going to move pretty much together. So it really depends on what you want to trade, and if trading a futures ETN you really need different permissioning in your account than to trade the CBOE volatility. So it's pretty much the same story. The VIX moves up and down based on the likelihood of the anticipation of selling or lack of selling, because it's essentially an insurance policy. So the more there's a demand for put options because of the expectation of a decline, the more they're willing to pay for those put options, and therefore that raises the volatility indexes. When there's worry, they pay more for puts. When there's not worry, they pay less for puts, and that's the very, very bottom line of that. So I hope that is a good explanation for you as far as that goes. We'll take a look at the VIX chart now, and let me switch back over to the charts. You should see VIX right now. You guys see the VIX? Raise your hand. All right, they see the VIX. Okay, so what we're looking at is the side-by-side on the VIX. So most of you look at this and you should see something that's fairly significant here. If you are if you have been studying the type of work that we do, just raise your hand if you notice something significant here. All right, hands are going up. So there's people that do see something significant here. So when you look at this, I'm going to ask this question. How many people look at this and have an expectation that the market will go up based on this? Raise your hand. Now I'm going to rephrase that. How many people looking at this believe that the stock market will go up based on what you see here? All right, so hands are going up. How many people here believe the stock market will go down based on what you see here? Okay, so the hands, they're about 8-to-1 on the expectation of a declining market to a advancing market. Of course, I would agree with you, with the people that voted that way, that the market is likely to move down, because what you see in here, looking at these patterns, I'm just going to look at this half cycle that you see right there, is that the conditions are such that it's likely that these cycles are nested, and that's why you see this upward projection. So if the implied volatility is going to go up, essentially it means that the demand for puts is going to increase. If the demand for puts is going to increase, it means the market's going down. And people are nervous and they want to pay more for insurance. The same thing right over here. So you have this bottom coming on the daily and this bottom here on the weekly. That implies that you're likely to get a decline in the market or a rally in the implied volatilities that you see right over here. Now, because this is a downward slant that you see right over there, it really gives me a sense that the upward tick in implied volatilities will not last that long. I would guess that it would go to maybe 24 to 28, somewhere right in there, and then just come right back down, because we actually have, a pretty good downtrend is what it looks like to me when you look at that overall in implied volatilities. I'm just going to grab this, and it's kind of, this is basically what we're looking at right in here, where you have this kind of downward motion. It's like a triangular thing that you see right in here going on. And it's likely to be in that zone between 18 and the mid 20s for some period of time. So I would say that the stock market's likely to have a decline. And earlier in the show, we talked about that it was likely to have some wiggling around and then pull back into mid-April and then rally again. So if it were to pull back into mid-April, that would be a rally right to about this point right over here, this time frame. In the implied volatility, and then pull back. So we're using all these different pieces of information for the correlations to be able to extrapolate a forecast out of it. And the forecast would be that you'd get some pop up in implied volatility, some decline in the market. It wouldn't be all that great. And then you would have the market rallying again, which of course is our overall analysis in the market when we look at that. So that's a look at the VIX, and hope that made a lot of sense to you when we look at that. And it just shows you just how important it is to be looking at multiple things when you do your analysis in the market. So that's a look at the VIX. We had a couple of questions on silver, so I'm going to handle those right now. Paul Kreuter asked us about silver, and he says, do you think that an early bottom in April is starting an upcycle back up to 25 or 26? Let's see, where are the other silver questions in here? And Steve is asking about silver also. So we're going to look at the silver chart. Switch over now from the VIX to /SI. And let's take a look as we maximize this sell right in here. So last week when I did Future Speak, and basically for some weeks, I have been warning about weakness that we saw in the chart pattern. And we saw this head and shoulders forming in here and noted that if it got underneath that neckline, it would be not a good sign. It would actually be pointing to the measured move over here below 20. So that's pretty extreme. Now, the question is, are we about to get into the next cyclical rally, which is right in here? That's a good question. Remember that these blue spikes that you see right there, these are actually stretched ovals, are telling you about the time frame that a low should be made in here. So it makes sense that this little 1 week rally is not the whole rally, that something is going to come in here and you get into this resistance zone. But because it's broken this neckline, because it's come right down to the 78.6%, it creates a sell zone. We believe that the rally, if it did come, would get up somewhere over here over 25.40, maybe here into 26.30 area, and then move down. So that pretty much answers that question. Yes, it makes sense that this rally phase right in here would give you some rebound in here. Silver has gotten hammered in here as we saw this weakness setting up. And when you look at the amount of declines, now those of you that are seeing this for the first time, I don't build the complex structures and everything because it's hugely time consuming, where you put in all of the potential projections on the upside, potential projections on the downside. You essentially end up with two channels. And when you have negative momentum trading in the bottom channel right there, and you can't even rally to resistance, you're really in bad shape. And you could see the slim ribbon PO here. I mean, those of you that aren't using this, I really encourage you to do a lot of studying around this this indicator. This is your signal indicator of momentum that pairs with the slim ribbon right over here, and it just gives you some of the best information you'll ever have. So it was giving negative information way back from right over here, and has continued to say that the rally in here would fail, gave you these signals, and you can see it just got wailed on after that. This is a huge percentage decline from 2660 down here to 2380 in that brief 8-day period there that we're looking at. So if you see this cycle right over here, which bottoms in about 3 to 5 days, and you look at that, and you go back and you look at the weekly pattern right over here, and the question is, well, are we going to get a rally into that area? I'm going back and forth, daily in here, weekly in here, and this tells a story to us that the gold pattern bottoms right around there, the silver pot pattern bottoms right around here, and that says a few more days likely in here Doesn't have to go a lot lower. You could see the head and shoulders that formed in there. And then you could potentially get that rally. So if you look at it here on the daily chart, the resistance right over here is almost the same, 25.30 up here to 25.85. So it's a little bit shallower there. And that's what we would expect it to do. We would expect it to make the bottom that we have right in here. Then the next structure will begin to get built. Just going to grab this right in here. And then over at this point, it will give you that next rally into that resistance, probably fail somewhere right in there and roll over. Now I'll build the structure right around this center line once we get an anchor point in here, which I obviously don't have right now. So that will that's basically how I'm using the multiple time frame information, looking at this, the daily and the weekly, and projecting that sometime in the next week, approximately, you're gonna likely get a rally in silver. I hope that was really clear. If it wasn't clear, raise your hand so that I know that there are people that aren't getting it. Nobody raised their hand. So all of you people out there are getting it, and that makes me really happy. All right, so I have a question here from Dwayne. He wants to see wheat and Google. So I'm going to give you wheat, and then RV is going to give you Google. So let's go to the wheat weekly right here and the wheat daily right in here. So I've already worked on this for tomorrow's show, this is stretching out a little bit longer than expected. It's still not really a horrible pattern. It's just breaking below that major 38.2 right over there, coming down to that 34-week moving average. But it's late. It's likely that what we're seeing in here is that it's stretching out by just a little bit. You can see if I just take this cycle bracket down over here, remember these are guides, and I'm just going to open it up one click. I might have had too much there. One click right there. You see, and then just kind of line it up a little bit better right there. And that just helps you. And it's getting close to the ghosted cycle right there. So maybe the cycle, the original ghosted cycle is the right one. But you could see just a tiny little bit of changes in energy, and it shifts over by just a little bit, but it doesn't change the analysis. Here you are when you see this support right over there where it got underneath. So we want to really look at that and remove that and say, okay, well, this support is no longer holding. So I'm just going to delete that right there. And then what we're going to look for here is the 78.6%. and see how much lower that is right over there and how close we got to it. So it's kind of way down over here. So you didn't get down low enough to really have any worry there. Just move that. So we said that that 223 bottom was too early, and that the likelihood would be that it would come down one more time, and you could see it actually did that. Now bottom is due when you look at that, and likely it won't get below that 78.6%, somewhere between that major 38 and 78.6. And when you look at this cycle right over here, I want you to note the larger or more dominant cycle that we have overlaid in there, that we have out of phase cycles. And that bottom of the dominant cycle is actually due right there if that proves to be true. And maybe today we got some capitulation. So there's that potential move there into that retracement about 643 in that confluence area that you see right there, 643 right there. And we'll be putting in, once we have the anchor point right there. But you'll notice I have this already projected up to 643 because I looked at where that confluence was here in the daily. So we're looking for a bottom in here in wheat and a bounce, but we'll just have to see how much energy it has, and that lower portion of the confluence resistance is probably what stops it now. So 643 would be my first target here on the upside once this low is made. And if it's lower than where we are now, then it will will reduce that target. Arby, I'm going to ask you to take it over and take a look at Google.
All right, Slim, appreciate that. Let's pull up Google here. Google has been super strong after that earnings gap. Let's pull it up here. I was looking at Baidu before. So this is Google weekly over here, and then daily on the right. So you can see if we pull up the weekly chart, Google has basically been going sideways for weeks here, right? And what we're looking for is for this to then push up on the upside and then get another test of those old highs prior to likely rolling back down on the downside. So this next low is due relatively soon here. So we would look for this to likely move a little bit more and then push back up on this weekly time frame. So this is overall acting quite well, but we, obviously we haven't done much for really ever since like about 6 weeks or so. So quite a while. If we look at the daily chart, you can see here, really it has really done nothing. So but if we draw this little, you can draw this kind of range here. We need to kind of really push out of that range to really show something, right? So right now we're not doing a whole lot. We need to see this push up. So kind of just waiting here and kind of waiting for this to wake up, right? It's really just been doing nothing for weeks. So we kind of need to see something here. So far, it isn't showing anything, but we should see another push relatively soon here.
You know what's interesting about that, RV, is that when I did the Nasdaq analysis in the beginning of this show, we talked about that triangular shape, the consolidation.
Yeah.
And the likelihood that there's going to be some potential waffling, but it's too early to go down.
Yeah.
And more likely it's going to go up again one more time.
Mm-hmm.
When you look at Google, it really fits the scenario.
Saying the same thing. Yeah. 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 I mean, there really isn't anything that I could say here that isn't like good, right? Overall, it's just going sideways, holding and just going sideways. So there isn't anything negative to really say here.
A flag or a high tight rectangle.
High, yeah, right. High. It's basically, you can see this little bit of a flag, and then you're just basically going sideways for weeks here. So you kind of need this to push prior to kind of doing anything here. So.
All right, good. Yeah, I think that, I would rate that as positive overall when I look.
Positive overall, and kind of waiting, because otherwise, you can see this range though. It's just kind of going back and forth. So you don't want to be looking for like moves through this zone yet, because you need to show some. It needs to actually show us that it has something. Right now, it hasn't. It's just up and down, up and down, up and down. So you have to just wait. Yeah.
All right, don't go away, because we have two other things on equities that I'd like you to look at. One of them I don't even know anything about. JAGX, Jag Healthcare, I think. JAGX Healthcare.
Never heard of that one. Yeah, I can take a look at it. Jaguar Health.
Oh, Jaguar Health. So.
Can see if there's any cycle analysis here. Okay, I've never seen this stock before, so it looks like it's had a crazy life. So
see, when you look at something like that, we're going to look at that and say there's no way to read the cycles in there.
Yeah, you need to see some kind of movement up and down in order to get some visualization of those lows, right? And we really can't even see that here. So,
and you can see the momentum, the value of the momentum conditions that it showed you in there. When the momentum turned up,
right here,
fabulous, right? When the momentum turned down,
and then turned down, and then straight down.
Right. Right. What about the daily?
Daily, let's take a look. It's similar. There's just really not a lot of data after this large spike here in
cycles
November. So
we can see the momentum indicators are great, right? But there's nothing else to say about it. So sorry, we can't give you more on that. Basically, that's why we pick out, the universe that we do, because we've looked at them and know that there are cyclical rhythms in there that we could recognize. And if something is in there and we don't see it, then we just reject it or take it out of our universe. So.
Yeah.
All right. And we had a question on two more questions.
Yeah,
here.
Viacom, right?
Viacom C, yeah.
Yeah, so Viacom blew up in that whole Archigo, or I'm not sure how you say their name, but Archigos. Yes, they ended up blowing up, but you can see that big spike and then large sell-off. I obviously haven't updated this chart, but we have a low due relatively soon here. But after a move like this, we aren't going, it is unlikely, let's just put it that way, that we are going to move, right back up. This is going to have to take some large movement kind of like this, just chopping kind of over time here because of that large sell-off. So kind of broken here at the moment here in Viacom. I don't know if I have updated daily. You can take a look, but so for the daily chart, you can see there's a low due in a few weeks here. So really any little move like that would likely turn back down into this next cycle low. So that's really the overall picture here in Viacom. There isn't a whole lot to say about it until we kind of form that next key weekly low.
Right. It looks like in a couple in 1 to 2 weeks you'll get a daily low and weekly low.
Yeah. So then maybe we can look for some kind of rally back up, right?
Makes me want to take a shot on the long side there.
Yeah. I mean, after this kind of move, but you just have to be careful with sizing and stuff. So
yeah.
Yeah.
Artem asks for XLY. I'm pretty sure you have that.
Yeah, XLY. So XLY, if we look at the weekly here, got some hands raised there. So XLY, we saw the weekly low formed and are now moving up here on the weekly time frame. If we look at the daily chart, low formed early here. So we have moved these left, and you can see we are now rising here. Formed a little bit of a bull flag into this minor cycle low, ready to push back up, look for a move through that flag back to the upside. So pretty positive setup here in the XLY.
Yeah, I agree. Looks good.
Got XLI too, looks like.
I didn't see XLI. Do we have that question?
Yeah, I think Paul asked for that one. Let me see if I can pull it. Let's pull up XLI, excuse me. So XLI, beautifully strong. So let me just pull over the weekly chart so you can see this properly. So weekly time frame, one big long cycle broken up into these minor thirds. And what I want to just do is look at the beautiful large cycles here, right? The rally, the sell-off, the rally, the sell-off, the rally, the sell-off, the rally, sell-off, right? You can see that really, really clearly. Rally, sell-off, big rally. But this all made sense because of this long cycle, which is why you want to look at these on, you want to really look at these on this kind of thing, like where you're looking at years of data. You don't want to just look at, say, like this, because then you're not going to see it. You have to look at longer data sets so you can see these kind of larger flows. So overall rallying and looking for a little bit higher here, and then some pullback into that next key intermediate term low timing. Daily cycles still rising, and looking for a little bit higher here, and then a roll back down into this next short-term low timing. So overall, relatively positive
Great
here.
momentum,
Actually, quite
great
positive.
Momentum signals there. Really good momentum signals.
Beautiful. Each of these, you can see this, right? You can see the bullish signals here that came in, bullish signal here that came in, bullish signal here that came in, right? And then follow through each time. So very, very nice.
Yeah, love that. And we have a question on Microsoft. While you're at it, just keep rolling.
Sure. So let's pull up Microsoft here. I think I'm going to need to bring over that grid. So give me 1 second. So Microsoft is a little bit weaker relative to, say, Google. If we pull over the grid here. So Microsoft rallied here, right off of this key low, and is now basically going sideways, but is not acting quite as well. We have a low due in a couple of weeks here. So what we're looking for is maybe a little bit lower, right? And then another test up and then a move back down. So that's like the overall way that this would shape out to us here. A low relatively soon, a rally off of that low, and then a roll back down here. So that's the overall structure here in Microsoft. If you look at the daily, not really doing much, right? Just going sideways. So next low is due in mid-April. So that's the overall picture here in Microsoft. And it would be best if we hold above this old low at 224.26 to keep this overall, to keep this next rally that would look like that. Otherwise, it could look more like that, So you really want to hold this old low to keep this kind of move in play, so it basically to keep that like $240-ish range on the upside in play. Otherwise, let's just say we move through this low here, okay, and we make our next low down here, then we would look for a rally maybe back to like 230s and then roll back down. So that's really the picture in Microsoft. Not quite as nice looking to me versus Google. So
yeah, I agree with that. We have a question on XLY. It broke through the cycle of the September lows.
Did not XLY broke weekly cycle through? No, guys. Let's see. Oh, I'm not on my chart. That's why it didn't pull up. Okay, let's pull up XLY. It went through SEP lows. So September low is right here. So this is well above. So this low that just formed is well above that old low, right? So under those, so what you look for is, with this being a higher low, you look for a higher high to form in this next cycle.
And
So
if it doesn't, there's a strong message.
If it doesn't, there's definitely something that we would note. If this starts to move down here and then break this low, that would say that this rally is now over, and we would look for rallies to fail into the next key low timing there. So, but right now it is still positive.
Okay, we're going to have to close off questions in here because we're running way over, and we have a lot of questions in here still. That's the last for you, Arby, that I could see.
Hey, Slim and Arby.
Yeah.
Matt, I just wanted to take a second. You get a lot of questions on, can our indicators help with warnings, the momentum indicators? I'm just going to show my screen real quick.
Sure, please.
Those of you that are level 4, can you see the chart stream raw grid here?
Yep.
On Viacom.
Yeah.
So if we look at the, our reversal scout that came into play, it warned of a negative condition forming 324-ish. And then, you got well in advance in the 2-hour for sure as well. So you did have a valid trade setup based on our methodology that would suggest a continuation, at least in that near term. And then when we had that big move lower, it was capturing that information and letting you know of those warnings. So that's another reason why looking at momentum is so important, because typically you get a warning. Sometimes you could get a complete surprise. But overall, this, our indicators, if you're using the chart streams, would have warned of some changing conditions. So I just wanted to point that out.
Absolutely. Yeah.
So for those of you that are looking at our chart streams, and you don't realize that it's not your analysis is not limited to the 7 symbols that we show. You can just if you're a level 4 member, you could just upload these grids and put anything on there.
Right.
And have this great information. So
yes.
Right.
Absolutely. Yeah. Nice job with that. Yeah.
Yep.
All right, good. All right. Let's answer a few more of these questions in here. I'm not sure that I'm going to get through all of them, but I'll do my best. There's an anonymous attendee that wants to know, I want to know, why aren't you giving your name? All right, next. He wants to know about Charles Nenner, another cycle guy out there. And he says that he's another cycle analyst. And he says, are there different styles of Hurst cycles? Well, first of all, I have looked at Charles Nenner in the past. I can't speak for his style of analysis. There are different variations of Hurst cycles, and there are different variations of cycle analysis, period. So if you look at Sentient Trader, I'm not afraid to speak of other ones out there. I mean, they built software that looks at it very differently than we do, and that's Hurst analysis. I wouldn't rate it better or worse than ours. It's just different. It's more computer telling you what it thinks versus humans like us telling you what we think. That's really the difference. And so there could be any variation of that cycle analysis, and the timing will be different. I would tell you that if you compare cycle analysis to Elliott wave, the variances are much less in cycle analysis than Elliott wave. We don't have all that changing of labeling that Elliott does. So it's there will be variances, but I don't think they're going to be anywhere as great. And yes, the timing will change. You've seen us shift around cycles and move them out by a couple of clicks, and all of a sudden something looks very different. So there is variance in the way that analysts are going to look at this. VIPs want me to look at /6E. VIPs, I was reviewing this earlier, getting ready for the show tomorrow. So this is fairly ready. You can see in here, I'm in the right one, weekly 2. There you go. There's the analysis right there. We were looking for the VIX to go lower. I'm sorry, the 6E to go lower. I got VIX on the brain. As we saw the peaking coming right in here, the momentum turned down, the expectation for the dollar to rally. So we're looking at the correlation. And now we have this bottom. It's we slightly downgraded it a little bit deeper based on getting through 78.6. This level right over here is about 116.30 in the euro currency. Also, this is pushed out a little bit to the second week in May. We had it at the last week in April. So that extends the top in the dollar out by about the same period if you're looking at trading the dollar. Here is a potential low right over there. And also there's a larger dominant cycle that I see in here that could very well be in play. It's not, the smaller cycle is not all that clear that I wouldn't say that the dominant cycle is likely what's playing. That would give you, if I point at this, it tells me 5.5. This one over here tells me 5.7. So that would mean we'd get a bottom, we'd get a rally, and then move down into that period of that projected low there near 116. That is a look at the VIX, VIPs. I hope that was clear to you. Soybeans, we're going to do this one for a nil /ZS. We were looking for soybeans to fall into a low, which was quite a high low. There's your, well, this is a good opportunity. You can see what a chart looks like without cycle analysis on it. And then all of a sudden it gets a whole different perspective when you put the cycle analysis on there. In this case, we have the colored zones, the colored phasing, rising phases, corrective phases. And you can see we're getting to the end of a corrective phase in here. And that's why I said, once we make a bottom, we're likely to move up and take out that 1460, maybe even get up into the 1500s. Here is your daily right over there. And also a bottom due, as you see right there. So we're likely to get a bottom and then another rally. And I could see 15 bucks looking at this soybean market. The only way that that could deteriorate significantly would be if the declining phase we're in right now extended. In other words, if this got a little bit longer and got down and threatened this low at around under 13, which could happen, it's not that ridiculous, that would then change my upward projection based on the depth of that decline. But that's, in my opinion, a low probability. So bottom due in soybeans and likely to move up. Jeff wants to know, do you see a bigger topping pattern in June? I'm assuming that question is for the stock market. So I'm just going to say that I have said many, many times that once we got past that last correction in the intermediate patterns in the stock market, it was likely to rally into the springtime. That projection was out into May, June. The only thing that can hurt that would be breakdowns in the Russell and the Nasdaq that would give us some sense that the market was breaking down underneath. There was some of the legs were coming out from under the market that hold it up, and then it would bottom sooner. But I have been saying pretty consistently May, June was the time I would see the stock market moving down. Balin is asking, do you have some ideas about being more flexible in a choppy market like this? Well, it's important to identify whether a market is in a momentum condition or it's in a choppy condition. Generally, when you have fighting indexes like we have right now, where you have the market, recovering yesterday and the Russell down almost or over 3% or around 3%, you have disparity in indexes. You're likely to be in a choppy condition. The choppier the market, the more an active trader should narrow his perspective. You're going to look at shorter time frames and just trade the chop. And your expectation is that through identification of average range, you're going to decide where you envision a move to go to and then likely stop based on the important numbers. So you have to look at the market, analyze it, and create an expectation based on market conditions. Yes, we're in a choppier market now. RV showed you several different charts that showed that on the daily chart. Microsoft, Google, the stocks that are market leaders are chopping in ranges. And you can focus even on those. That helps you when you see where those ranges are and the chop is in those market leaders. So when momentum is strong, you widen your perspective. You look for longer moves. When momentum is choppy, when the market turns choppy, you narrow. You look for shorter time frames. You carry less positions overnight. You carry, you might be an active trader that likes to be a swing trader over 3 or 5 days. You're probably better off not doing that in a choppy market, but more day trading or planning on holding for 1 day. So shorter time frame when it's chopping, longer time frame when it's momentums. We have Len asking for natural gas. So we'll take a look at that. Again, most of the things that I'm showing you, I'm going to show you tomorrow in Future Speak. Also, I've been looking for a bottom in natural gas. Let's look at the side-by-side analysis right over here. So you can see, looking at that, I'm going to ask the same question right now. Is there, raise your hand if you look at this chart and it speaks to you. Okay, so it's so important at a glance to be able to look at something and say, I now am formulating an opinion based on this. The opinion that I have just when I look at this at a glance is that the cyclical patterns are bottoming. And when I look at that here on the weekly, and when I look at it here on the daily, you can see that they're pretty much in line. Now, note the momentum negative. Note the momentum in here negative. Note the signals right in here is negative. That says to me there is some work to do in here. And you can see we're not looking for a lot out of it right over here, but maybe it begins to improve. The momentum conditions begin to change, and that's where you get the potential bigger move. And we're projecting based on this major pattern that you see right over there. And you can see that hammer bottom that we highlighted in green. That really looks like the important low is already in place. That ultimately gets up over to past that 340 area right over there as time goes by out into the summer. And seasonality wise, as you get into the summer, they start thinking about fall and winter. They start thinking about hot temperatures and more use of natural gas. So weather is a big factor. And it says to me in here that, with a little patience in here, you're liable to be able to get into a very good long side trade. And if it's not working, I think it'll be telling us that it's not working. /CL, Joseph has asked for that. We've been looking for this correction to come in light crude, as you can see. Let me just make sure I'm on the right weekly. I want to get these to line up properly. There you go. So you can see the large dominant cycle patterns there. You can see the minor cycle, and we're looking now into the second minor third as we're in this corrective period. That's what we were looking for. You see the evening star that occurs right in the fib extension target zone, and now the pullback that probably has a brief period ahead of it before it begins to move up again. I can use this and say, well, this looks to me like it's in an area that's a sell zone, and that you have one more trade to the downside. This pattern in here suggests April 14th would be the ideal low, plus or minus several days. When I look at this one right over here on the weekly, it says April 18th. So you can see the alignments in time right there, and that sometime into mid-month, that would be about 2 weeks from now, there's likely going to be a low. In the meantime, if you're an aggressive trader, you probably could look for the market to move to the downside. Jules is asking for Bitcoin /BTC. And my analysis on Bitcoin, we're going to get this over. Let me get the weekly up here and the daily right here. All right, so Bitcoin, it's had a tremendous week actually, and you can see the rally in there after that big decline. There's been a lot of adoption, news about adoption this week, with Visa and PayPal. PayPal now opening transactions in cryptocurrency, and all of that probably weighing on the gold market, silver market, because there are a lot of people that want Bitcoin to be the new gold. So this analysis is suggestive when I look at this that there will be continued advances, maybe a minor decline that gets it down to about under 5,000 here. And now this is upgraded today. You can see that as the time goes by for this correction, it's using up the window. Then we begin to look for higher levels for the next correction. This would be just under 5,000 right there, and then likely getting up here towards this level of 68,000 right there. So a few weeks down, another move up to 68,000, and then this time frame over here where we think is going to be a major downside wave in Bitcoin out into the summertime. So right now we look for 5,000 to 68,000. 50,000 to 68,000 is the range. If I said 5,000, I meant 50,000. And here you can see the shorter term in here. It really looks like you're going to get a modest pullback in here. This gets you to down maybe 54, 53,000. Then another move up, and then this low that we're pointing right there is 5.7. When I look at this low right over here, this is 425. So somewhere around May 1st would be where we're looking for that minor low around 50,000, and then the next move up. So Bitcoin overall, when you look at the momentum conditions, very solid. If you look right here on the daily chart, look at those beautiful signals there on the momentum signals on the bottom on the slim ribbon PO, which has remained positive. It almost wanted to go neutral right here, but it wouldn't let it and just moved up again. And that was a very, very nice signal right at that point, where it then moved up quickly from 53,500 up to about 60,000 that you can see. So beautiful signal right there. Still looks positive when I look at that. So that is a look at Bitcoin. So I'm going to have to pass some of these things. There was Artem is asking a question on the Nasdaq and Tesla. Will Tesla start going up again after the passage of clean energy? My opinion on Tesla, you probably don't want to hear. I think it's going to get run over by somebody now renamed Volkswagen to Volkswagen. I think that Tesla's done. I mean, the call by what's her name, the call for 3,000 on Tesla. I think she's just lost her marbles or something else that she lost. But she's completely wrong in my opinion on that. And I could see Tesla at 300 before it has a shot at even at 1,000. So I don't think that Tesla is going to be positively affected in a significant way where it acts better than the Nasdaq. And I think that's really what your question is when I look at that. A question from Mark, okay to trade UVX calls? Well, not if you were on my team, it wouldn't be. TLT, Lewis is asking, I'm going to save that for the show tomorrow. Eric asked, where do you see S&P in 6 months? I think I answered that I think it's going to rally into the spring. And you have heard me say multiple times, I think the last half of this year is a bear market. So in 6 months, I think it's going to have topped already. Natural gas, we handled that for Len. Crude oil, did I do crude oil already? Yeah, I did, right? Okay. So we did that. The dollar, we will handle the dollar tomorrow in the show also. And Vips says, thanks, great analysis. Thank you, Vips. We also love your support that you always give us. And Artem says, yay, he's not the only Tesla bear. Okay, well, there you go. So for people that are Tesla bears like us, if I'm right about the Nasdaq and it's got another shot for the upside, Tesla will go up at that point likely. And that's probably going to be a shorting opportunity. Man, I hope this was a ton of great information for you guys. Rashmi says it was a great show, and I completely agree with you. I think it was a great show. Matt did a great job on showing all of that great where you look for all of the information on how to use all of our content. I already showed you how ready he is on all of these stocks and stuff to show you the great psychoanalysis. Somebody told me I use the word great too much, and amazing I use more. So I think we're really good. How's that? Thanks for attending this show, guys. What's your closing here?
Oh, it was a great show, a great analysis, good time. Appreciate everyone's attendance, and we look forward to always doing it again, connecting with our members.
That was fun, guys. Thank you very much. Appreciate it.
All right, everybody, look at this slide. This is for you to know where to write when you need specific information. Membership issues, website issues, write to team at askSlim.com. Slimulator, Momentum Tracker, SIR, ETF report, chart streams, and anything about using anything on the site, write to Matt at askSlim.com. Trade ideas. I want you to note that the trade ideas are available for level 3 and level 4. It is a fantastic service. Slimulator rankings, chart analysis requests. If you're a level 4 member, you can do a chart analysis request for 2 symbols a week. There is a form now. You can just click it and make sure you say it's chart analysis. That will head over to the right party to do this. And anything about level 3 or 4 trading or analytical questions or anything on the cycle workshop, you write that to slim at askSlim.com to me. Thanks everybody for coming. I think it was just a great show and had a lot of fun with this, and we'll be seeing you in a couple of weeks. Thanks, guys.